Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me for another show. Heaps of interesting things to talk about this week in the markets and the commodity space. And also any stock codes you're interested in, let me know those in the second half of the show. We're going to go through those, look at the technical setup and see what's going on with them. And also, everything today, general commentary only, doesn't take your personal situation into account. Having been through all of that, let's get into this week's first chart. Here we go, the ASX 200. And well, the ASX 200 has continued to lose ground this week. It's now back at the 100-day moving average. So I've got the 50-day and the 100-day moving average on the chart. And this is the first time the ASX 200 has been back at the 100-day MA since back in April when prices started to move higher. I'll discuss what this means for the coming weeks in a moment. And then over in the US, one of the most persistent themes this year has been bearish sentiment. I've got a fascinating graph for you. I think you're really going to like it. It goes back to 1987, and I'll show you what it could mean for the year ahead. I'll get to that shortly. But before we do that, let's start with this latest price action in the ASX 200. Last week, we looked at two possibilities, or we discussed two possibilities. Both involved ongoing consolidation in the market. Now, the first possibility was the most bullish, and that was for maybe prices to trade sideways for a few weeks along the 50-day moving average. So holding onto their gains and trading sideways for a few weeks before then potentially then breaking to a new high. The other possibility we discussed was for a deeper consolidation and for a retest of the September low and the 100-day moving average. And well, as we can see from this week's price action, that's the one that's been playing out. So how much more could be in this pullback? Well, there's already signs of the dip being bought. Let me just expand this a little bit. Let's have a look at this price actions. This is on Wednesday. See, prices opened on Wednesday. They traded down to their lows. They tested the September low before then rebounding and then closing up near their high for the day. So that's encouraging, but it's going to take more than a one-day bounce before we can say the consolidation is over. What we need now, we need to see follow-through buying that pushes prices back up above the 50-day moving average. That's the key now. See that follow-through come through. It's great to have one positive day, but you've got to get the follow-through to give it any sort of real credibility. I think the bullish scenario would be, at this point, I think the bullish scenario would be for a rally from current levels, followed by maybe a few weeks of sideways consolidation, just back and forth price action between the October high and the this week's low. And if we got that sort of that sideways consolidation over a couple of weeks, then maybe that then sets up that platform for a push higher towards maybe the back end of November or somewhere into December. I think the key factor in maintaining this, maintaining a near-term bullish outlook, is for prices to hold above this area, this support area that comes in at around 8,600. It marks a previous all-time high from February, a secondary high that was back in June. It was also support for the market around July as well. So it's a meaningful level to keep an eye on. I think if prices were to flip from being above support to being beneath support, well, I think that would weaken the overall structure, and it would be a sign that the dip's not being bought. It's like the only way to get down here below this support is if the dip doesn't get bought. The other concern would be having the ASX 200 slipping beneath the moving averages. So it's already below the 50, which isn't that big a deal at the moment. But what would be more concerning if prices were to sort of like come back down, get below this support, then start consolidating below support, below the moving averages. That would be worrying price action. But of course, that hasn't happened at this point, and hopefully it doesn't. But I think it's important to know where the key risk points are. So it's initially it's keeping an eye on the September low, then the support at around 8,600, and not seeing price action which gets stuck below support and then below moving averages which start to roll. That's what we don't want to see. Hopefully that doesn't eventuate. But nonetheless, we need to be aware of what to look for. Until I get cause to do otherwise, I'm approaching this as a consolidation within an ongoing bullish trend. At this point, rising moving averages, and the trend is still up. I want to jump over to the equal weight, the ASX 200 on an equal weight basis. So this is, of course, the ASX 200 index. But let's jump over to the ASX 200 equal weight. And it's interesting because it's just ended a record-breaking period. And that's what this indicator below is. I'll tell you what that is in a sec. So basically, the record-breaking period has been it's finally come back to the 100-day moving average. So it spent the last 132 days. So here's the 100-day moving average. The equal weight got above there in early May, and it's been 132 days, I think, at my count, 132 days it's taken to come back to the 100-day moving average. And this is what this indicator below shows. It shows it starts to count from when prices get above the average. Tells us how long it's been above there. And we can just compress this. This only goes back to 2018, so it's not like a super long-term period. But you can see this is the biggest block. This is the longest the equal weight has been above the 100-day moving average since the data on this particular index begins. So this just puts the strength of the most recent period, I think, into perspective. So as I say, it only goes back to 2018, but nonetheless, you can see that the last 6 months have been exceptional. And from that perspective, it shouldn't be a surprise that we're now seeing prices come back down towards the 100-day moving average, and we're getting that pullback, we're getting that consolidation. I don't think that indicator I just showed you, I don't think it has any great predictive merit. Big ends, big runs come to an end, and it doesn't necessarily mean the market's then going to get bearish off. It means the market's going to consolidate. I think that's probably what we experience now. At this stage, we've got a strong bullish trend. We have a strong bullish trend, and followed by a pullback to the 100-day moving average. That's a normal part of the bullish cycle. And until the underlying structure changes, for me, it's that would be, for the underlying structure to change, that would require prices to fall below those moving averages, and for the moving averages to start rolling over. And until that happens, I think the incumbent trend gets the benefit of the doubt. And of course, that incumbent trend is to the upside at the moment. Just coming back briefly to the ASX 200, I remain long stocks generally. I've sold a few stocks that have hit their stop loss levels recently, but I've also bought some that have triggered entry signals. So it really is stock specific what I'm doing. I think it's a case of remaining optimistic and continuing to take risk, but as always, accepting the situation can change. And that's where those stop losses come in to help manage risk. It's not about getting stuck in stocks and just hoping things are going to go well. It's having that defined exit plan for when things don't go according to where the trend may currently be positioned. Now, we're going to jump over to the US market in a sec, but if you're getting some value from this, please hit that like button. Please leave us your comment. Tell me what you think. Do you think we're going to hold above this 8,600, or are we in for a larger downturn? Let me know. It's always interesting to know what you think in the comments. But please hit that like button. Mate, it's a big deal. It just tells YouTube you're watching. YouTube shows people videos that other people watch. So, and that keeps this show on the road. So click that like button and help me get this out to other people. All right, so S&P 500 next. So S&P 500. Just a reminder, I've got a graph I want to show you. I'm going to show you that in a moment, going back to 1987, which I think you'll find pretty interesting. But before we get to that, just looking at this price action for the week, and it's been the week of pullbacks. The S&P 500 and the Nasdaq, for that matter, they're both starting to come back to the broader market. We spoke last week about the big caps possibly getting a bit ahead of themselves. So I think the pullback that we're seeing now, it helps keep the market more balanced. What would concern me would be if you like that Magnificent Seven, if those top 7 to 10 or so stocks, if they were surging higher and the rest of the market was flat, I think that would be worrying. This rally we've had this year, it's largely been built on participation, and I think that's important going forward. So big caps are coming back to the broader market. I think that's okay at this point. The potential for more consolidation, I think it remains in place. We said it last week. I say it again this week. I think there's that potential for more consolidation. A retest of the 50-day moving average is a real possibility, but nothing's happened to alter the underlying trend. The moving averages, 50 and the 100-day, well, they continue to track upwards, and price is above those moving averages. While that remains the case, I think the trend is up, and that's what's been working since May. What's been working since May is like following the trend, staying with the trend. I find it so interesting that people always want to look for a top. And that's been the case the whole way up. I see things online. I see videos warning of crashes, of all sorts of things. It happens all the way up, and it's happened every year since I've been in the market. That goes back to the early 90s. It's always people looking for underlying the top. And that's it's all well and good. And at some point, there inevitably will be a lasting and important top that sticks for some time. But I think there's more money to be made by staying on trends rather than looking for trends to end. Yeah, they're going to end, but you can make a lot of money in between by staying on trends. That's been what we've been talking about in these strategy sessions since way back down here in May, and that's what's been working. I think that's the play to continue with. And when the market does peak, we've got strategies like trailing stops to sell when the markets do turn, and they do come back below those moving averages, and the market does move against us. But at this stage, this remains a bullish trend, experiencing a pullback. That's what we currently have at this point. Jumping over to the equal weight, let's just have a quick look at the S&P 500 on an equal weight basis. And this is our clue last week that the S&P 500 may be close to a pullback, because unlike the S&P 500 that's been hitting all-time highs, the equal weight has been range-bound for the last 2 months thereabouts, just tracking sideways. This week's price action brings the equal weight down to the 100-day moving average. This is where buying at the dip would often be present. I think it's important that prices get a foothold around current levels. If they were to drop and then start to consolidate below the moving averages, I think that would then start to set up some vulnerability. We don't have that at the moment. Like I said with the ASX 200, it's just about being aware of things to look for where vulnerabilities could creep in. But at this stage, as I said, this is a range-bound market, and until we see a strong rebound off the averages, I think it's a case of ongoing consolidation. Quick look at an indicator. We looked at this last week. It's the percentage of Russell 3000 stocks above their 100-day moving average. So Russell 3000 is a broad measure of US stocks. It's not the small caps, which are the Russell 2000. This is covering most of the vast majority of the US market. What this indicator is telling us the percentage of Russell 3000 stocks above their 100-day moving average. And we've been discussing this declining trend. We've discussed it a few times in recent weeks. And this week it broke below its October low. So now there are only 43% of stocks above their 100-day moving average. I think that the key to ending the current consolidation is reversal in this indicator. We need some more stocks above their 100-day moving averages, and we need to see more participation, because that's what this indicator tells us. As this indicator rises, there's greater participation. At the moment, we have declining participation. Declining participation, it doesn't help push markets higher. Now, onto that graph I want to show you just to finish this section. So I just saw this on my X feed through the week. It's from a guy called Ryan DeTrick, and he puts up some really interesting graphs from from time to time. So what this is here goes back to 1987. It's using data from the American Association of Individual Investors. And so what we have, so the blue bars is market performance. So there's zero, there's a plus year, there's a negative year. So market performance since 1987. The gold squares it's showing us the difference between bulls and bears in the AAI survey. So really it's giving us a reading of net bullishness or bearishness across the year. So it's taking results from the entire year, not just a single week or a single month. It's the entire year. And first thing that's interesting is, like, this year to date, it's been weighted towards the bears. There's been a greater number of bears persistently through the year. Yes, there was a really bearish period through March during that sell-off into April, but nonetheless, bearishness has persisted. So that's one interesting thing to note. So we've had all these bears, but we've had an above-average year for the stock market so far, 16.5%. When this slide was done. So it's so this really has been what they call a hated bear market, a bear market that keeps rising despite people thinking it should go down. It's also interesting that after other negative periods, the following year has been positive. So you just go through, you can just pause this at your own leisure and just go through, look at the other negative periods, and they tend to for the length of this history, it's led to positive years the following year. I don't think we should be using this as a predictor for what's going to happen, but nonetheless, I think it's interesting information to consider. It's interesting to go through and analyze this chart a bit. When people are the most optimistic, it was a negative year, and just taking in things like that, highly optimistic sentiment doesn't always lead to strong performance, but overly bearish sentiment often is a leader into a stronger period in times to come. Just bringing this quickly back to the S&P 500, and I'm still long the S&P 500. I plan to stay that way until the structure gives me reason to do otherwise. But I think that the odds favour near-term upside. Near-term consolidation. I think the odds favour that near-term consolidation, but it's still a trend to stay on and try and see off with those wide trailing stops. Okay, I'm going to jump over to small caps now. We're going to start with the US, go into the Aussie small caps, go into all the commodities. What I think might happen with gold in the coming week, and uranium and copper and oil, and they're all in there. Your stocks, we're going through go through all those as well, so get those ticker codes ready. But of course, that wraps up the free section. If you're not a strategy session member, there's a link below. Click that, come in, you get the full replay, you get the live session next week. Ask about your own stocks. Costs you very little, and that's what it costs to put all this together for you. It's a lot of information which really I don't see being offered anywhere else. So think about doing that and coming in and experiencing what we do for the next part of the show. All right, so let's go over to, let's start with the Russell, and so this is the US small caps.